Bank reconciliations are done monthly. That's the very first important thing to remember about a bank rec. It's done every month. Why is it done monthly? Because you have a responsibility of reconciling what the bank says to what your booked cash ledger account says. You are reconciling cash in the bank to the ledger account of cash on your books. That's what the bank reconciliation outline represents. Let's look at it. We take our balance per the bank and we do two adjustments to it basically. The first adjustment to it is we add deposits in transit. What is a deposit in transit? A deposit in transit is a deposit that you've recorded on your ledger account, on your books. A deposit that you made that the bank has not yet recorded. Give you an example. It is 5 o'clock on Friday. A check comes in from a vendor or a customer, and that check is for $500. I get a check from a customer for services I provided to that customer for $500. I record that $500 on my books. I debited cash, I credited accounts receivable or sales, money came in, I then go to the bank and deposit it. Bank statement comes out the next day. Bank statement doesn't show the deposit that I recorded on my books. That is what a deposit in transit is. It's cash receipts recorded on the company's books, not yet recorded by the bank. I have to add that back to my bank balance. Think about this. My bank doesn't show it. So my bank balance needs to be increased by the amount of the deposit that my book balance or my book ledger shows. Then I'm going to plus or minus any bank errors. These are errors made by who? The bank. If the bank made an error, and let's say that they put money in your account that should have been in somebody else's account, you then need to subtract it from your bank balance because it belonged to someone else. Any error that the bank made, let's say there was a transposition error, you wrote a check for $150, they took the check amount of $510 instead of $150. You now have to adjust your bank balance by adding back that difference. All right, so plus or minus any bank errors. These are errors made by the bank. The next step is you want to deduct any outstanding checks. These are checks that you've written and deducted on your cash ledger that the bank has not yet received or cleared yet. These are checks that you wrote on your books that went out to pay vendors, but the bank has not received it to deduct it from your bank balance. So any outstanding checks that you wrote that the bank has not presented or has not been presented to your bank, you have to deduct. Plus or minus any errors again that the bank may have made. These adjustments very quickly get you to an adjusted balance per the bank. Let's stop right there.